Jenny Horne here with me to look at some of the earnings and technology. Last night we got Cisco, we got Twilio, we got Fastly, we got HubSpot. We got like a big chunk of kind of like secondary tech, but Cisco's a pretty big giant here, so let's start there. Big layoffs. Market really not a big fan of it the last 6 months. It doesn't look like that's going to change this morning.
Because it's not growing. So Cisco has benefited somewhat from this like AI halo effect that we discuss a lot, but I think it has to be a show me story before we can really like get on the AI hype behind Cisco. I mean, they did give some disappointing guidance for not only the upcoming quarter, but for the next quarter. So slowed growth isn't exactly what you want to see, and I think that some of these investors are frankly running out of patience. But
yeah.
Overall,
contraction, right?
Yeah, I mean, yeah, absolutely. And like you said, they're cutting about 4,000 jobs or 5% of their workforce. They did highlight the fact that they think AI orders, or they reported AI orders have tripled to about 3 billion since the previous quarter, and that doesn't include the business from the joint venture with NVIDIA, which is a pretty good AI partner, of course, to have. But overall, I think that right now we're seeing that we could still benefit from, again, AI, but it has to be a show me story. We have to see the fact that right now this is a good company that is expensive and hasn't been able to see the degrees of growth of pretty much all of its peers. Like Arista Networks, for example, right now is at least growing. So we saw shares dip as much as 4% yesterday after hours. We're obviously still lower today. The company does trade at a forward PE of around 12.8 as of Wednesday's close. So it is sitting below its 5-year average. So it's relatively more affordable. But again, I think that a lack of growth for now the next 2 quarters, bit concerning.
Yeah, just stands out like a sore thumb in the sector right now. Revenues shrinking from a year ago, guidance missing, making layoffs. Just seems like they've got too much baggage in their old business, not enough connections to the new stuff that's hot. So, gonna get left behind.
You're going to get left behind. I mean, I always think Cisco is like the tech of yesteryear, but they've actually been more resilient than even I would have thought. But again, I think this is AI halo effect. Show me the AI growth. Show me the way that you're going to expand over the next year. You cannot see contracting revenue now.
True. Okay, how about Twilio? This one used to be kind of a star child of hyper growth cloud, but I think that market's gotten a little bit questionable about their growth too. It seems like we're long past the heyday. Hasn't been a great performer.
No, it hasn't, especially when you look at, I think I was looking at the 5-year chart, we are like 85% off of all-time highs. I mean, that is, it actually looks okay on a 12-month basis, but you zoom out and ouch. But all in all, they reported fourth quarter earnings Wednesday after the close, but they did also say they would begin this operational review of their underperforming business unit, formerly was known as Twilio Data and Applications, that's being scrutinized by these shareholder activists to identify the more appropriate path forward. They did record a $286 million impairment charge related to that business unit. And this is all due, I mean, this was born out of their $3.2 billion acquisition of the namesake segment back in 2020. So continuing to cause headaches. So now we have all these activist investors giving different opinions about like the direction of this business unit. That's not exactly the sentiment you want, but I do think the fact that we are seeing shareholder scrutiny and like activist investor scrutiny means that we could be moving perhaps in a more appropriate direction. But all in all, we did see shares down as much as 9% in reaction. They reported lower than expected active customers. Street had been expecting 311,000. They reported around 305,000. That's another key miss. You cannot be reporting disappointing account growth all in all. And they also did guide slightly below what the Street had been expecting at around 1.05 billion. They guided between around 1.02 and 1.03 billion for their revenue. Again, disappointment across the board from the earnings last night.
Yeah, okay. So we're definitely out of the strong points of tech, it seems like, for earnings. Kind of in the laggards category now.
Seems like it's like a 2-horse race at this point.
Yeah, NVIDIA next week. Okay, so that's going to hopefully rev things back up again for bulls. Twilio, Cisco, not going to do it. Going to drag on tech in the trade a little bit here today for the cloud sector. Thanks, Jenny. Okay. No real improvement for Cisco shares, especially as the market was trying to broaden out to find some value names. Cisco doesn't look like it's going to meet the criteria.